Welcome to Under One Roof MTL, where we are demystifying home ownership one episode at a time. My name is Robin Flynn, joined as always by Fred Pichette of Fred and Martin Mortgages. Hi, Fred. How are you?
Good afternoon, Robin. Going great. And you?
E- Excellent. Very well. Also, Martin Spalding of Fred and Martin Mortgages. Hi, Martin. How are you?
Hi, Robin. I'm great. You?
Good. You don't have the vest today. We're going with a sweater instead, I see. Lovely.
Because there's only so much teasing I can take.
And also LJ Aguinaga of LJ Realties. Hey, LJ.
How you doing?
Very well, thank you. We have so much to get to. There's a little bit in the news this week when it comes to the economy and interest rates, so we've got lots to tackle. But we'll start with our trivia question of the week, brought to you by Felix and Norton Cookies. You can visit their store at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. If you're the first person to text in the correct response with your name to 514-790-0800, you'll receive delicious Felix and Norton cookies delivered straight to your door. Our question this week: how many times a year does the Bank of Canada announce its policy rate? Do you know it?
I love that question, Robin.
790-0800 is the number to text. It's a good one. We'll have the answer for you before the hour is up. But we've got a lot going on in the news this week. The Canadian economy increased just a teeny bit, 0.6% in the final quarter of 2024. Economists seem to be somewhat split on whether or not we're going to get another rate cut this week. I don't think that this group is split on what the Bank of Canada will do. Usually, strong economic growth means we might see a break in rate cuts, but things are, shall we say, uncertain right now on the economic front. Fred, I know that you're chomping at the bit to talk about this week's announcement.
Well, yeah, as you know, guys, I'm always optimistic, and sadly, like the tariff comes in, but the only good news about it is they might reduce the interest rate for the next for announcement, according to what I was reading, and what about economists were saying that we might have a 0.25 rate cut each time for the next for announcement, which is it's the only good news if you have a variable mortgage of a line of credit. Besides that, well, it is what it is. The economy, like.
Yes, but if rates are going down, usually that's a sign that things aren't necessarily going very well, right?
So definitely that's typically what we were expecting, but I've had this conversation with lots of clients over the last couple of weeks, particularly in the last week, and the rest of Canada is hurting right now, and we've seen that time and time again. Right now, Toronto's condo market downtown is a mess. Vancouver prices are not what they used to be, and across Canada as a whole, prices are dropping. They're not where they were, and people are sitting on inventory. Montreal or Quebec as a whole, to be honest, we've always been insulated, whether it's for good, whether it's for bad. We're insulated from what the rest of Canada is doing to a certain extent. And in this case in particular, when things were going really well during COVID, we were going less well than the rest of Canada. And when things dropped off right after in the 2022, 23, 24, we got hit a lot less. We only dropped about 10% compared to the 30 to 40% that some of the other markets saw. So when we take that into account right now, interest rates are going to start coming down, but we've already seen one of the hottest starts to the year since COVID, to be quite honest. So this is, in my opinion, going to add more fuel to the flame right now and going to poise us for a very strong appreciation year in the greater Montreal area. So I'm very comfortable that I'm expecting 7 to 10% appreciation growth this year in the GMA.
Martin, do you think rates are going to be cut this week?
Wait, if I put on my mortgage hat or if I put on my real estate hat, obviously I'm all for lower rates. My concern is the broader economy as a whole. And so, yes, people who are sitting with variable rate mortgages, or even, the bond market is tanking right now. So we're seeing fixed rates come down as well. But, the root cause of all of this is more concerning than the benefit that it's deriving. So the one thing that I took away, obviously, I watched on Tuesday night, like most Canadians did. Um, and my takeaway from the speech that we witnessed on Tuesday night is here's a guy who looked like he was running for office and isn't in office. The other thing that came away from that is how polarized the United States are.
Clarify, you're talking about the President's State of the Union address.
Well, I'm trying not to mention the name, but I'm talking about Tuesday night's presidential address.
Yeah.
So he seemed like a guy who was running for office, not in office. And you saw the crowd, the Democrats on one side, the Republicans on the other, how polarized that room was. The other takeaway I took from a Canadian point of view, that when you put all your eggs in one basket, you're going to pay a price one day. And I think we're paying that price. So, my other takeaway from that is we need to lower our dependency on the US market. We need to concentrate on interprovincial trade and lower the barriers between provinces. And we really need to focus in on buying Canadian. So, I know your question was, do I think mortgage rates are going to go down next week? I hope so. People are suffering, as LJ said. But I think that this is the lesson, or this is the tipping point where we need to go into a different direction, and we have the rest of the world to trade with. And what we have to trade, everybody around the world wants.
Yeah, everybody needs aluminum. Everybody needs potash. Like these are crucial goods and services, right? That the whole world needs. Strengthening trade with the European Union would be fantastic. I saw this week that Switzerland is sending Canada a whole pile of chocolate. We know Swiss chocolate is better than Hershey, Pennsylvania chocolate, obviously. So that's nice to see. But I also thought it was kind of funny that Switzerland seems to be taking a side. Isn't Switzerland historically neutral and doesn't take sides? I thought that was kind of neat.
The other thing I would be concerned about, if I was sitting in Panama right now, or if I was sitting in Greenland, I mean, he didn't call us the 51st state on Tuesday night, and he didn't call Trudeau the governor. But if I was in Greenland or if I was in Panama, I would be scratching my head right now.
So even if the US does not, oh gosh, attempt to annex Canada, what a weird thing to even be saying, but welcome to 2025. If they are attempting to annex Greenland or, take control of the Panama Canal, this could still have an effect on Canada and Canada's economy, right?
I think anything that goes that's geopolitical on a global scale will affect us. I mean, we are stuck right next to the US. There are huge benefits to that. But as we can see, there are huge downsides to that because we're so dependent on them. So anything they do will have a default effect on us.
Now, Fred, you've been in the mortgage game for a really long time. Not to age you, of course. Mana,
That's
have
good.
you ever seen a time like we are witnessing right now? I don't know about you, but I'm exhausted of living through unprecedented times.
Well, the situation right now, it's quite different. It's quite a unique. We went to very, very high rate in 2020, 2022, right after COVID. And all of a sudden now it seems that all interest rate will suddenly go down very quickly as well. I think it has a lot to do with the uncertainty right now. It's not really about the economy, as Canadian economy seems to react pretty well, as you see in the report in December. Again, it's really about, I think, what happening in the U.S. that affect us right now. There's so much uncertainty and job loss, and that potentially the Bank of Canada will have to do something to avoid that. Which is, and again, it's just the only thing I don't really like about it. It's we leave that in the hand of politician, and that's a bit scary as well. Like that's why I always say people, whatever you do, you need to go and vote, and then you what's good, what do you think is good for the country, don't sit on the sideline and wait.
Absolutely. You know what's not uncertain? Hiring the Plex doctor to handle your property management. You know that everything is going to be well taken care of, and you know that you're going to get a fair deal. So if you want to take the hassle out of property management, give LJ's team a call at the Plex Doctor 514-709-6397. And you can go to their website, Plex Doctor, that's Plex DR, like Dominican Republic. Wouldn't that be nice right about now? .com, plexdr.com. Still to come, what are the different types of lenders available to borrowers in Quebec? We'll find out after we check traffic.
Which lender is right for you? This is your Mortgage Minute. When getting a mortgage, you'll typically work with one of three types of lenders: A lenders, or conventional, like big banks and credit unions, offer the best rates but require strong credit scores and stable income. B lenders, or alternative, provide more flexibility for those with lower credit scores or self employment income, though at a slightly higher rate. Private lenders cater to those with poor credit, unique financial situations, or urgent needs, but their rates and fees are much higher. Choosing the right lender depends on your financial profile and goals. Stay tuned. We'll break down each option in more detail.
This is Under One Roof MTL on CJD 800. I'm Robin, that's LJ, that's Fred, that's Martin. We are with you until 1 p.m. A, B, and C lenders. What are the differences between conventional, alternative, and private lenders in Quebec? We got a little bit of a teaser from Martin in his Mortgage Minute just now, but now it's time to dive in a little bit deeper. So, Martin, as you outlined in your Mortgage Minute, in Quebec, mortgage lending is categorized into three separate types of lenders. Do you want to break that down for us in a little bit more detail?
There are what are called conventional lenders, or A lenders. Those are the major banks, or RBC, TD, BMO, Scotiabank, credit unions like Desjardins, and the monoline lenders that we like a lot, First National, MCAP. They're all federally regulated. Why borrowers choose them? Generally, they come with the lowest interest rates, best terms and conditions, and you can access to insured mortgage options offered by CMHC's agent and Canada Guarantee. Who qualifies? You need a strong credit score, so typically anything above 650, 680. You need stable and verifiable income. So if you're a T4 employee, or you're a professional, engineer, doctor, dentist, someone like that. You've got low debt to income. So we have two ratios, GDS and TDS. You need to come up with at least a 5% down payment, which would make that an insured mortgage, 20% uninsured. Why would someone not qualify? We get a lot of that at Fred Mark Mortgages. People who are self employed. So people who don't declare a lot but generate a lot of revenue. So what we can do is a stated income application. Again, I'll swing that to Fred after I'm finished with this little explanation. People who have high debt ratios, who have credit issues, and some of the property types, things that are out in the boonies, some of the lenders just don't want to touch. B, they called alternative lenders. And who are they? So the alternative lenders, the big three in Quebec that we know, are Home Trust, Equitable Bank, and Haven Tree Bank. Why borrowers would go there? Because their flexibility when it comes to income verification is a lot less than with an A lender. They're willing to work with a lower credit score. They can accommodate higher debt ratios, not ridiculous debt ratios, but higher debt ratios. Often it's people that don't meet the strict criteria of an A lender that go there. They're recovering from credit issues, unconventional properties. They're willing to finance things that are a little less conventional. You still need to have reasonable levels of financial stability. They're going to charge you a little bit higher interest because the risk is higher. They may ask you for a larger down payment, so there's more equity in the property. And then finally, C lenders. So private lenders are individuals who are willing to lend you money. There are things called mix mortgage investment corporations. That's a group of people who are investing together, or just simply private lending firms. Often this is last resort. You want to save your house. You need a leg up. You'll go to a private lender, but it has to be a short-term strategy, and you need to have a clearly identified exit strategy. So if I'm going to lend you the money for 12 months, how are you going to pay me back in 12 months? So if your strategy is, I just want to stay in my house for another 12 months and I just need to pay my bills for 12 months and I'm planning to sell in 12 months, that's a clear exit strategy. But most people are going down this road because they want to save their houses. So it's people who are facing foreclosure, people who have very poor credit scores, sort of like under the 500s. We saw some 400s this week. So people are desperate out there. It's short term. So it can be a bridge finance. You bought a house, you haven't sold your house. And so now you got to finance your new purchase. So you're bridging short term again. And you just got to be really careful because it does come with a lot higher interest rate. You need $50,000, you load up your credit cards, and then all of a sudden you're paying 22, 25% compounded daily. Whereas with a private lender, you're looking more 8 to 12, 8 to 15 with some fees. It may seem high, but it's a lot better than loading up your credit cards.
The GDS and TDS, what is that? People heard about the qualification based on income. It's a formula that calculate your principal and interest on the loan plus the taxes of the property plus the eating cost. We multiply that by 100 and we divide by the gross family income. We call that gross debt service. This is a GDS. The maximum GDS is allowed with a Hay lender, with any regular bank, it's 39%. And you need to qualify on a higher interest rate. Like the PNI, the principal in interest, let's say the interest rate is at 4%, you need to qualify at 6%. And the maximum GDS allowed with any regular bank or monoline lender, it's 39%. Now, the good news is we could qualify on 30 years, which is back in the day, we used to qualify on 25 years, which is this is pretty good. And the TDS, just to wrap it up, we call it the total debt service. It's the same formula of the GDS, but we adding all your liability, loan, installment, balance on your credit cards, car payment, and we divide again by the gross family income. And the maximum TDS is 44%. Like if you're below 39 or 39 up to 44 TDS, you do qualify. If you're over that, then we start looking for potentially a B solution. Why? Because you cannot qualify because you're over ratio. Like this is how it works to qualify with an A and a B. And obviously with a C, there's not much qualification. It's all about equity.
If you want to find out more about your lending options, you can get in touch with Fred and Martin. Obviously, they know what they're talking about, as they just proved. Go to their website, fredandmartin.com. Up next, how do you know if now is the right time to buy an investment property? We'll break it down for you after the news. Welcome back to Under One Roof MTL on CJD 800. I'm Robin Flynn with LJ Aguinaga of LJ Realties, Fred Pichette and Martin Spalding from Fred and Martin Mortgages. If you're a first-time home buyer and you're thinking about an investment property, isn't that an interesting way to start your home buying experience, starting with an investment property? How do you decide what kind of property to buy? What kind of real estate investment in Quebec is a good choice right now? When's the best time? We're going to help break that all down for you right now, starting with the best type of property for first-time home buyers. LJ, is there a difference between condo, single-family home, and a plex? Would you recommend for a first-time home buyer?
100%. Now, again, the question here always comes down to what are we actually looking for? What are your needs and what are the goals that we're trying to achieve? If you're looking for a place to live for your family, you want stability, you want to set down roots, then I'll typically recommend buying a home where you can be in control of your destiny, where nobody can kick you out, etc. And really, you have full control to paint the walls, do whatever renovations you want, and set up your lifestyle the way you would like. A lot of people come to me though and they say, "Hey LJ, what's the best investment?" And I receive that question more and more and more because everyone between the TikToks and the Instagram Reels and all sorts of information out there, people are becoming more financially literate, and with that has come a huge push in the market for people to want to have better investments and really spend their dollars wisely so that they can have a better retirement, a better future life, etc. The best investment is always going to be a multiplex. Okay. We're going to get greater returns on a multiplex, whether that's a duplex, triplex, and beyond, maybe a 100-door apartment building, whatever it might be, because that's when we start to get vertical integration. What I mean by that is that we only have one roof to redo every 25 years, if you will. We only have one foundation to maintain, but we have multiple units that are benefiting from that one structure. If one tenant leaves, well, you only have one missing out of potentially two, three, four, five. So you're not at the full risk compared to a house or a condo that when one tenant leaves, well, that's your entire income. All of a sudden, you're collecting $0 until we restabilize, re-rent it out. So you're spreading out your risk on that front as well. It's also a way to house hack. We can buy a duplex with as little as 5% down up to the first 500 grand, and you can live in one unit, you can rent out the other unit, you can offset your cost of living in a property, and we can do this again with a triplex, fourplex, etc. And we can start to get some really interesting returns. I've seen people offset their entire cost of living by buying a fourplex, renting out 3 units, living in one of them, and the rent that they collect will cover the taxes, the insurance, the maintenance, etc. And all of a sudden, you've removed the biggest expense in every single Canadian's balance sheet: housing. So it's a really interesting way to start building your investments and grow with real estate. Martin.
So I know you're a real estate investor. And so when you're sizing up a property, what's the criteria before you say, yeah, we're going to make a play for this one? Like, are you looking in Laval? Are you looking in Brossard? Are you in Point Saint Charles? Like, where are you in what makes you, what motivates you to say that's a property I want to own?
A lot of factors. So the classic location, location, location obviously plays a role into it. So if you were to ask me what is my investment criteria when I'm looking at an investment, the first thing is, am I within 10 minutes of a metro station? So I need to be close to public transit. Am I within 35 minutes of public transit to downtown? This is typically my target market, my demographic. I'm looking at young professionals. I'm looking at students. These are people who typically have stable incomes. They take care of the place. They align with my values in that sense. The next thing is, how much capital expenditures am I going to have to put into the building? So what I mean by that is the roof due? Is the foundation due? Is the brickwork due? Are the windows due? Are the doors due? These are capital expenses that we have to put into the building that unfortunately people don't pay you more money for. They expect the roof to not be leaky. They expect the foundation to be solid. They expect the doors to be working and not drafty. So those aren't the kind of renovations that I like to do, because those are assumptions from every single tenant that are going to be in good condition. I want to find a property that I can really optimize by changing the kitchen, the bathrooms, the floors, make aesthetic changes that can really increase the value of a property where a tenant's going to be willing to pay more money. In Montreal, we have a lot of properties that have these double living rooms. Can I close off one of these double living rooms to make an extra bedroom? All of a sudden, I have more bedrooms. I can get more tenants into the property, and I can get more rent for the property. So those are typically the things that I'm looking at. Obviously, we look at the entire expense. So what are insurance going to look like? What is taxes going to look like? The general upkeep. Do I have to pay for heating? Do I not? Is it per unit? Stuff of that nature. But that's how I typically look at a property. And then obviously I say, how much value can I create? What's this property going to be worth after I optimize it? So after I've created all of this value, and then what's the bank's opinion on this so that I can analyze how much money am I going to refinance out at the end of the play so I can go do this again, because like it or not, I don't have infinite funds. So it's how much can I invest into one project, then pull it all out and then do it again on the next one so I can keep using the same capital to grow my portfolio over years.
So, follow-up question. Are you the type of person that looks for a property that's just ready to go? Like, you're just changing the name on the title, it's mine, and I'm just going to keep going? Or are you the type of person that's looking for the crummiest house in the best neighborhood, and then you're going to turn around and fix it up?
I'm always looking for the optimization potential. So I'm looking for properties that are, I'm not going to go as far as they have to be in disrepair or distress, but I'm looking for things that I can optimize. So, like I mentioned before, can I add bedrooms? Can I renovate kitchens to really increase rents? Montreal is in this very interesting situation in the sense that a lot of places are rented for, let's say, $750 today, but market rent for a cleaned up apartment is $1,500 to $2,000 a month. So I look for those opportunities. Are there properties that I can go into and purchase and really double the
Cool.
rental value on it? Because if I can do that, then I'm going to increase the value of the building significantly, and that's where I can get paid.
LJ, what do you say? It's great for a rental property or great investment, but let's say you're first time home buyers and you have, I don't know, 25, 30,000. That's probably your dream to buy a Plex, but potentially when you start, it's maybe not possible. What will be the strategy you think you should do with someone's working at, a couple working at 60,000 each, having 30, 40,000. What do you recommend? Like, what a strategy that you could do?
The strategy to me is, if you can get $40,000 in saving, let's go find a duplex for 500 grand on island, off island, etc. Because with 500 grand, you're going to spend 25K on your down payment. You're going to spend about $15,000 on your closing costs. That's your $40,000 to qualify for a $500,000 apartment, assuming that one of the units is collecting about $1,000 a month, which is very normal. Montreal rent at 1,000 almost minimum. You're really offsetting your costs on that. So just about any couple who's earning, let's say 50 grand each, so total income of 100 or even 40 grand each, is going to be able to qualify for that purchase realistically. So to me, that's your starter dream. I mean, we did one together a few months ago, a very young couple
Yeah.
kind of went down that road. And to me, that is the perfect playbook for anybody who's looking to get into an investment right now.
Wrapping up here on Under One Roof MTL, what kind of grants or subsidies are available to first time homebuyers? Is there any sort of programs that people can take advantage of to do this, to make this dream come true?
There are several. I'm not sure we're going to have time to go over them all, but just to kind of fire them off at you, we have the first time home buyer incentive, which is federal. We have the home buyer's plan, which is increased to $60,000, where you pull from your RRSPs tax free. We have the FHSA, which is the best tool ever known to mankind that we've been given, where we actually get to reduce our taxable income, and the gains are going to be tax free as we move forward. We have the welcome tax refund. Certain municipalities, including Montreal, will give you a refund for certain qualifying first time buyers, depending on price point, depending on if you're a family, stuff of that nature. There's the tax credit for first time home buyers that's offered federally and provincially, where you get up to reduce your taxes by up to $1,500 plus 750 provincially in Quebec. And there's some eco renovation grants. So making your home greener could get you up to $5,000 in grants. So there's tons of programs available. I have a whole little chart. Feel free to shoot me a message after the show, and I'd be happy to share this list with you.
You can reach out to LJ at 514-500-4040. Shoot him a text, give him a call. He loves to hear from you. He'll help you figure out what's the best plan of action. Coming up, our property of the week, plus the answer to our trivia question. How many times a year does the Bank of Canada announce its policy rate? Find out after we check traffic. This is Under One Roof MTL on CJD 800. I'm Robin, that's LJ, that's Fred, that's Martin. We are with you until 1 p.m. My favorite part of the show, as always, is our property of the week, because after LJ tells us all about it, I'm going to go lurk his Instagram to try and find pictures of it so I can look at it. What do you got for us this week, LJ?
Are you looking for the perfect blend of city convenience and riverside tranquility? Welcome to 5250 Rue Saint Ambroise, Apartment 2, a charming garden level 2-bedroom condo in the heart of St. Henry, listed at just $385,000. With an open concept layout, modern kitchen, and private entrance, this cozy home offers comfort and style in one of Montreal's most sought after neighborhoods. Just steps from the Lachine Canal, enjoy scenic bike paths, trendy cafes, and the Atwater Market, all at your doorstep. Commuting? The Place Saint-Henri Metro, highways, and bridges make getting around a breeze. Don't miss this rare opportunity. And if you're in the area, stop by Bernice for some of the best pastries in the city.
$385,000. That's incredible, LJ.
You buying?
You and I should talk. I'm going to buy.
You buy? You make an offer?
Put an offer on right now.
Let's do it.
That's amazing. I love it. I'm pretty sure I saw you post this one on Instagram this week, actually. You were in.
It's a really cute unit, honestly. It's right near Gadbois Park. So you've got all the park facilities there. You've got the arena and whatnot. It's an awesome unit and a great location. And these apartments have done very well over the years. We've been selling in that little pocket for probably the last 7 or 8 years, and they've always done well.
Amazing. Okay, let's get to our trivia question of the week. I know Fred really liked this one this week. Brought to you by Felix and Norton Cookies. How many times a year does the Bank of Canada announce its policy rate? The answer is 8 times per year. 8 times. How come they don't do it monthly? Is there a reason?
I thought the answer was not often enough.
What did we learn this week? So we learned that the Bank of Canada is set to announce if there's going to be another rate cut or a pause or even a hike. That's not happening, guys. Relax. But that is happening on Wednesday, March 12th. So stay tuned. I know I'm going to get a text from Martin with breaking with whatever happens, because he always texts in the group chat to let us know what's going on, which I love. We also learned that if you are a first-time home buyer, there are a variety of options available to you for investment opportunities, and there are also several borrowing opportunities available to you as a Quebecer.
Can I share some personal experience? I was thinking about this conversation that we're having. And back in the day, I used to travel extensively for work. And as much as I wanted to own a single family dwelling, I always gravitated towards condos or townhouses because when I left on my travels, I knew that when I came back, there was a certain level of security being part of a community or part of a condominium complex, that if something went sideways, that there was always somebody around to take care of my unit. And the other thing is, I was also interested in buying plexes, but I quickly realized that I did not want to deal with tenants. And so those are the two things that came to mind. Is as much as a plex is a great idea, do you really want to have to fix someone's toilet at 3 o'clock in the morning? Just buyer beware. I know we can call LJ and we can call the Plex Doctor. I know exactly where we're going with this, but I've just, I find there's other things that you can invest in that could probably give you the same type of return. So you got to be aware that you're dealing not only with your own property, but you're dealing with tenants. Just putting it
You
out
need
there.
you need to be a people person if you're interested in purchasing a Plex. If you're an introvert and you don't like dealing with people, I mean, just hire the Plex Doctor. Honestly, it doesn't
Well, that's where I was
really.
going. Exactly.
Yeah,
So.
exactly. In terms of getting in touch with the experts that you've been hearing from for the past hour, how do you get in touch with you, LJ? Where do people go to reach you?
Best place to check out our website, ljrealties.com. That's LJREALTIES.com. You can also find us on all socials under the handle LJ Realties or under my personal handle, LJ Aguinaga. That's LJAGUINAGA. Feel free to call or text me at 514-500-4040. You can also reach out to our property management company, Plex Doctor, plexdr.com, 514-709-6397. And finally, we have a real estate meetup happening this Tuesday at our offices downtown in front of the Bell Center. So we'll be getting together on Tuesday, March 11th from 6 p.m. to around 8 p.m. It's very informal. There is no registration required. You can just drop by. We're on the 5th floor of that building at 1275 Avenue des Canadiens de Montréal. Same building as the Starbucks in the Provigo. You go through that entrance and go up to the 5th floor. And we just talk all things real estate. I'll be there. Fred and Martin usually make an appearance, and we can just chit chat about any questions that you have. You can talk to other real estate investors. Sometimes there's inspectors around. There's all sorts of real estate professionals that are there, happy to just share experiences that we've had and ideas, and kind of you can bounce ideas off of us if you're not sure how to start your journey or what's next in your journey effectively. It's just a great little community that we've built over the last couple of years. We meet once a month, and it's the second Tuesday of every month, and that falls on this upcoming Tuesday, March 11th.
And there's indoor parking available, which I love. Give a chance for all the ice and snow to melt off your car while you're in there learning about real estate. It's a great, great trade off. Fred, Martin, where do people go to get in touch with you?
By the way, I've been to a couple of the meetups, and I highly, highly recommend if you're interested in real estate, investing in real estate. There are so many people who are willing to share their knowledge and share the mistakes they made when they started out so that you can avoid making the same mistake. So to get in touch with Fred and I, it's very simple. It's fredandmartin.com. All our information is on the website. And one thing that we don't often talk about, we're licensed in Ontario as well. So if you are actually moving from Quebec to Ontario or from Ontario to Quebec, we can manage your mortgage needs in both provinces. So reach out to us, fredmartin.com, Quebec and Ontario.
Fantastic. That's pretty much it for us for this week. We'll be back next Sunday at 12 p.m. right here on CJD 800. In the meantime, to learn more about the guys and the show, you can go to the website underoneroofmtl.com. If you missed anything, you can listen to this show in its entirety and past shows on iHeartRadio, Spotify, Apple, wherever you get your podcasts. For LJ, Fred, and Martin, I'm Robin. Have a great Sunday.